This is the part of the bill that matters to Bitcoiners. We have been beating on the table about the importance of the Blockchain Regulatory Certainty Act provisions in the bill. These are the provisions that protect your right to self-custody. These are the provisions that protect the rights of software developers not to be called banks and then put in prison, for example, like the Stablecoin developers for writing code. There are bipartisan rumblings that negotiating on those key points may be part of the ultimate deal to get the bill passed. Call your senators, call your congressmen, and put pressure on your representatives to let them know that the BRCA provisions are not negotiable. This is the part of the bill we need people to get upset about.
All right. Welcome back to the Bitcoin Policy Hour, hosted by the Bitcoin Policy Institute. As usual, joined by Ken Egan and Zach Shapiro, my colleagues, Zach Cohen here, also with the Bitcoin Policy Institute. I realized I haven't been introducing myself, so changing that this week. We got a good agenda today.
I assume you just thought you need no introduction because, you're Zach Cohen.
They all know me. Exactly.
Don't you know okay. Don't you know who I am?
Exactly. We got a good lineup for today. We got a little bit more Bitcoin policy this week than we have in the past couple of weeks. Seems like maybe things are rolling again in DC, so we'll get an update from Ken there. We've got a paper that came out earlier this week by BPI's head of strategy, Connor Brown, dealing with the Basel sort of financial regulatory framework from the Bank of International Settlements. So we'll briefly touch on that and then direct everyone, where to look at that. There's been some interesting movement on the tariffs. We've got our legal expert here, Zach Shapiro. So we'll get a little bit of his take on what's going on there, especially with the recent Supreme Court ruling. And then we'll use the remaining time to dig into the Trini Research report. The title, for those who have not seen it, is the 2028 Global Intelligence Crisis. I think everyone's pretty fired up on our end to talk about that. So that should be a good conversation, and stick around for that. As usual, if you haven't already, make sure you're subscribed to Bitcoin Magazine and the Bitcoin Policy Institute. Ken, what did the kids say?
Smash that like button and subscribe.
I love it. All right. First topic of the day, Blockchain Regulatory Certainty Act, clarity. There's been some statements coming out of the White House that, we've got, a week now, less than a week to get this thing rolling again and even, pass through the Senate. Seems like a pretty aggressive timeline to me, but, I'm not there and in the trenches. So Ken, what's going on there? Do you think this March 1st deadline is reasonable, or do you think it's more of a, hey, we got to get this thing going again?
I think they mean the March 1st deadline. I think it's also sort of a line in the sand. I mean, there's been a lot of activity over the past week. The White House has been really hustling to try to get the crypto industry and the banks talking about stablecoins. For those of you who listen to the podcast or follow the news, you may know that one of the big sticking points in market structure, introduced only after the fact by the bank industry and their allies, was a ban on rewards, and interest payments were already banned on stablecoins. They were already banned in Genius, but there was a ban on rewards. Some of you probably know, if you hold USDC, for example, on Coinbase, they'll pay you 4.3%, something like that. Anyway, the banking industry does not like that. The community banks definitely do not like that. And they have introduced amendments to the bill that would prohibit that. That, of course, is a big sticking point that resulted in Brian Armstrong and Coinbase and much of the crypto lobby withdrawing their support for the version of the bill that stood as of 2 weeks back, a month ago, was it even 2 weeks back anyway. Since then, the White House has been hustling. Patrick Witt, the executive director of the working group, has been convening meetings, trying to get the two sides talking. Interesting enough, you also, I think, saw Secretary Bessent made some comments this week about essentially telling the crypto industry, you're going to have to accept the fact that you're not going to get rewards on stablecoins. Let's just get the bill done. There is mounting pressure from the White House. I think the White House they've been involved, but I think they've been, up until the past couple of weeks, have wanted to let Congress do their thing, with the understanding that there was a sort of basic consensus that this bill was going to pass. And let Congress work on the details and send us your final bill within guidelines. Ever since the withdrawal of Coinbase's support, that's changed. The White House has been really, really engaged, and I think this is the first time Secretary Bessent has weighed in on the negotiations. So we'll see what happens. my personal opinion is, I think we'll see some kind of Senate version by March 1st or close to it, maybe that week. It's close. But I think there'll ultimately be a deal to to end yields. I think that I just don't. I think that's a red line. And when you see the Secretary of Treasury coming out and saying crypto industry just accept it, that's a pretty good indicator that the administration has prioritizing passing the bill over stablecoin rewards. Now, does that mean for us? And I'll let Zach go into some of the details about this, but it's Congress. Everything involves horse trading, and we have been beating on the table with this podcast for certainly the past couple of months about the importance of the Blockchain Regulatory Certainty Act provisions in the bill. These are the provisions that Bitcoiners should care about. These are the provisions that protect your right to self custody. These are the provisions that protect the rights of software developers not to be named or called banks, and then put in prison, for example, like the cyber developers for writing code. There are rumblings that there will be, and these are bipartisan rumblings. And this is what's got us sort of perked up and nervous a bit. There are bipartisan rumblings that negotiating on those key points may be part of the ultimate deal to get the bill passed. I'll turn over to Zach for some of the details of what that means. But needless to say, before this is over, I'm going to remind you all to politely call your senators, call your congressmen, and put pressure on your representatives to let them know that the BRCA provisions are not negotiable. This is the part of the bill that matters to Bitcoiners. This is the part of the bill we need people to get upset about.
Yeah, well, I mean, well said. Specifically, these provisions are the ones that make clear that if you're not a money transmitter under federal law, including federal criminal law, unless you are in independent unilateral control of user funds, any watering down of that, I think, kind of flips this bill from net positive to Bitcoin because it protects Bitcoin developers and therefore the development of Bitcoin tools in the United States to net negative because the legalization of ICOs, which is sort of the heart of the bill, isn't really relevant to Bitcoin, and the additional CFTC regulation over Bitcoin spot markets, whereas the CFTC doesn't normally have control over spot commodities transactions, is also arguably net negative for Bitcoin. And so this is the part we care about. Specifically, I think the politics behind this are if we lose sort of Republicans that would otherwise vote for this bill but will not now because of the banking lobby, and they have to win over some Democrats. There are national security Democrats that have sort of been fed the narrative that the BRCA developer protections are bad for national security because if people build permissionless apps, bad people will use them. Of course, the good counter arguments against that are criminals will use any tool available. That doesn't mean that we shut down technology altogether. We still allow people to buy a laptop without KYC, even though criminals use laptops. This really isn't any different. This is a software-based tool. It's not a bank. It's not a financial institution. And so it needs to be regulated as such.
Question to both of you. When I guess there's like two angles of this question. The first is like when BPI says, this is something we're watching very closely, this is something we're working on. What does that mean? Because I think a lot of people are listening to this and they're like, okay, I get that BPI is like this, Washington D.C. kind of policy organization, but like what are the mechanics of the work that we do on the advocacy side? And then two, is there anything we can do? Right? I think one thing that we talked about a couple of weeks ago is, hey, when Coinbase pulled their support, that was a pretty major sort of hurdle, you might say. Like it caused a ruffle. What are the highest impact things that both BPI can do and people listening to this podcast can do that will have a sort of similar impact, or is that just kind of not the reality of the situation?
No, I think, well, yeah, we are. We're not just like yelling at you every week on podcasts. I mean, BPI is a think tank, which puts us in a great position as if we can go to Capitol Hill and talk about issues, not industry specific things. So we all spend a lot of time on the Hill educating staffers about the reality, about specifically in this case about the FUD around national security concerns and money laundering issues. I've said before, like the sort of national security moniker is thrown around a lot. But when people refer to national security concerns of this, it is really like in the most narrow interpretation possible about national security issues being only akin to the ability to surveil and monitor things. National security is a lot broader than that. It involves economic security, food security, all kinds of things. But it's a convenient thing to say because everybody supports national security. One of the points I make to sort of skeptical staffers is that the North Korea is tossed around a lot. Like, it's terrible what they've done. Crypto is like funding their nuclear weapons program. I mean, it's partially true, but nothing in this bill, had this bill been passed 10 years ago, would have stopped North Korea from stealing anything. It doesn't matter. All this does is prevent you from doing certain things inside the United States. It would not have prevented the Ronin hack. It wouldn't have prevented North Korea from hacking Bybit, a regulated exchange in Singapore, a modern regulated jurisdiction. None of it would prevent any of that stuff. What it would prevent, however, in addition to infringing on people's rights, will prevent this industry from taking root in the United States. So, a lot of what we do, and I think staffers are open and they're inquisitive. It's just like, again, we're early. People don't have a deep understanding what this all means, and nobody ever really. And Zach's make this point better than I can. Nobody makes the link between AML and First Amendment. It's just things they're not. It's just not like, it's not intuitive to people that, wait a minute, if we insist on making software developers do something, how does that violate the First Amendment? It's not intuitive, despite the fact that it's also, frankly, not impactful. I mean, all the things they're talking about won't do a thing to prevent any crime at all. As with most sort of oppressive regulations, all it does is impose restrictions and burdens on you. So I'm curious. Zach does a good job at kind of walking through what the First Amendment means here and why it's important. And I'm sort of wishful that we get bipartisan open ears on this First Amendment issue, because it really is the key to it. It's not just we want the industry to flourish, and we want people to be able to build cool tools without worrying about being snatched up and put in prison. But there are larger issues here.
Yeah, so the First Amendment in particular, there's a reason it's first. It's sort of very foundational to the Bill of Rights and the Constitution, includes the right to free speech. Specifically, it is a right to free speech free from government interference. The connection between the BRCA is that publishing tools, publishing software is a form of speech that should be protected, that should not be infringed by the government. A government prohibition on speech before it happens is sort of considered the gravest violation of the First Amendment. It's called a prior restraint. Certainly, if you look at interpretations of money transmitter law that the Department of Justice has taken in the Samurai Wallet and Tornado Cash case, to me, it looks a lot like a impermissible prior restraint, which, to be clear, doesn't need the BRCA to be illegal. I think the First Amendment of the Constitution makes that illegal. But federal judges, at least in the Tornado Cash case, and I think implicitly in the Samurai Wallet case, did not agree with that. And so the BRCA makes that clear and is really belt and suspenders. But aside from the pure First Amendment piece of that, the question is what innovations and freedoms are we going to stop from happening, right? We need to be allowed to have peer-to-peer electronic commerce. That's clearly going to be an important part of this century. We talked last time or two podcasts ago about the intersection between that and agentic commerce. I think that's going to be an increasingly important thing, unless we have sort of clear ground rules for when are you acting as a regulated financial service business and when are you not. Aside from the privacy tools that we regularly talk about here, aside from sort of what is currently understood as DeFi, we're going to run into the buzzsaw of everything people are going to do with their agents. And so, I think this is just not just relevant for innovation in the Bitcoin and crypto space. It's also just a sort of a fundamental bedrock we need for the future of technology, to have clear rules between what is a tool, what is a sort of legal person or a business, when the sort of dual technologies of blockchains and AI are going to blur those conceptual lines. I would rather have Congress come up with the type of thoughtful answer that's in the BRCA than leave this to individual septuagenarian or octogenarian federal judges to try and piece this apart one by one.
Gotcha.
That is the rub of not passing a bill, that it goes to octogenarian judges, right? And they seem to always be in the same jurisdictions, right? But if and I know there's a lot of talk, even in Bitcoin circles, like, well, whatever, let the bill die, and TikTok next block. I mean, that's in part true, but there'll be cases. There'll be another Keone. There will be more cases where people are affected by this. So this is why we're doing what we're doing right now, certainly at BPI. And people ask what we're doing. Again, unfortunately, nobody volunteered to help us fund a Super Bowl ad about this. That'd have been cool. Any OG Bitcoiners, maybe next year. But absent being able to do that for the cause, this is why engaging representatives is actually important. I know it sounds sort of like Pollyannish, but when you call, and when a lot of people call an office, especially in election year, and say this is important to me, and if you oppose this, I'm going to oppose you. That actually has an impact. Not with some offices, but most of these members are kind of like, I'm voting with a win. I don't mean to. I don't mean to sound pejorative. They just don't have any heart. They don't have deep seated opinions about this stuff. Those that do, your Cynthia Lummis and Nick Begich, and on the pro side, and then the Senator Warrens and the Brad Shermans on the opposite side, they have deep seated convictions about this issue. But most of them don't, and there are other members who are quite good in this. But I name them just because they're the most prominent in both houses of Congress. So when you call and you let them know that you care about this, it actually does matter.
Yeah, that's great. Okay, before we move on, I think it's helpful for folks to kind of benchmark where the both of you are kind of seeing this going. And so I guess two-part question. One, do you see this getting done in the relatively near future? And two, will it include BRCA in its current form?
So I've got a bunch of meetings up on the Hill this week. And you'll get a flavor from the temperature of next week's podcast. If I leave work on Friday and have not a great feeling, and next week's podcast could be a booze fueled rip fest about what we have to do. Hopefully not. But this
tune in
is
next
the key
week.
time. Exactly. You want. As amazing as that would be, hopefully let's not get there.
Yeah.
But this is the key week. This is where the next week or so is key, and I'm eager to sort of hear from some key offices about where their members are, where their thinking is.
Zach, you want to weigh in here?
I am cautiously pessimistic.
Okay.
I think the most likely outcome is that nothing passes.
Okay. All right. Let's jump forward here. This should be a pretty short one for folks who haven't seen it. There's a great paper this week that came out from BPI's head of strategy, Connor Brown, titled "The Basel's 1250% Mistake." And for folks who are not familiar, the Bank of International Settlements has a framework, I guess is the right way of saying it. It's called the Basel framework. And it has certain sort of basically financial regulations for global banking infrastructure. It says, if you have this asset on your balance sheet, you need this set of reserves, a kind of like a risk management framework. And for Bitcoin, there's a 1,250% sort of risk premium for banks to hold Bitcoin on their balance sheet, a sort of punitive, maybe uncharacteristically high sort of penalty for holding Bitcoin, and the theory being that that's massively hindering banks' abilities to both custody and offer any kind of services around Bitcoin. And this kind of came to folks' attention late last week, and Connor worked most of the weekend on this. And I think it's definitely worth reading and definitely worth digging into a little bit here. So Ken, just high level here, why are we listening to the Bank of International Settlements on these things? And, to what extent are U.S. regulators, I guess, involved with banking regulation, particularly in the United States?
Well, I think Bitcoiners know we all ultimately work for the BIS, right? The central bank of central banks. What this really is a value judgment on the value of an asset on a bank's balance sheet. It's not that risk weight is not it's sort of beyond me how it's calculated. But I know what it does mean is that it essentially requires you to have dollar for dollar value in currency, and for example, Bitcoin. So it's very sort of, it clearly discourages banks from, if you have $1 billion of Bitcoin on your balance sheet, you need $1 billion of of dollars or equivalent instruments, would be treasuries, short treasuries, in order to be able to hold that to be inside regulations. That clearly is punitive. No one's going to do it because that's a lot of capital sitting on the sidelines. But that's the point, though. Like BIS does not want banks holding this asset, and hence the very punitive risk weight assessment. You know, the Connor's point. I think this was sponsored. I think this was sort of kicked off when Fang Li from Strategy put out a tweet talking about the new regulations. But it's part and parcel of the same discussion about sort of big international banking not wanting this asset as part of the financial system. And one way to do it is certainly in the aspects of the system they control is to make it prohibitively expensive to hold it.
Yeah, well said. Zach, I'm curious if you think there's any kind of corollaries we've seen here. I mean, obviously the one that came to my mind just thinking about strategy is MSCI. I think, which is just another sort of tangential example of the ways that maybe Bitcoin is being penalized within the traditional financial system. But curious kind of your take on the matter. I don't know if you got a chance to read the paper yet, but just want to hear your way in.
Yeah, well, so first, fun fact about the Bank of International Settlements, just to give you a sense of the quality of their crypto-related scholarship. I think they put out a piece in mid or late 2021 where they did a deep dive into the demographics of who owns cryptocurrency and came out with a sort of headline finding that people who hold XRP are better educated than people who hold Bitcoin. And that was an important point for them to make. So that's who we're dealing with. Connor's piece is called Basel's 1,250% mistake. What does 1,250% mean? It doesn't mean you have to hold 1,250% collateral when you hold Bitcoin. The baseline requirements for capital reserves are 8%. If you multiply that by 1,250%, you get to 100% one-to-one backing. Now, this is meant to be initially sort of in Basel's rules for like bottom of the barrel, like, paper shitcoins, right? Like the worst of the worst sort of subprime mortgage paper from 2008 that caused the crisis, where we don't know who the borrowers are. It's really opaque. And so we kind of need to assume this is worth zero. And so if you, the bank, are holding this paper on your balance sheet, like a lot of banks did that, caused them to go bust in 2008, like you need to have one-to-one collateral because this is really sort of smoking hot. Now, there are other instruments where you need to have sort of less collateral, but not sort of zero backing, which are, like other paper instruments where there might be duration risk, right? There might be some amount of credit risk. And then interestingly, for gold, there's 0% collateralization because gold is a equity asset, not a credit asset, right? Gold is not anyone's liability for it to be your asset. It's just a rock. And so then the question is, like, looking at this sort of spectrum, is Bitcoin more like a 2008 subprime mortgage shitcoin? Is it more like regular corporate debt, or is it more like gold? Of course, it's more like gold. The whole point of Bitcoin is it is an equity-based system. It's not a credit system. It's not anyone's liability. We know exactly how much Bitcoin is worth at any given moment. It's perfectly liquid. It trades 24/7. And if you're holding Bitcoin, like you understand, like, yes, it is volatile, but you understand how volatile it is, and you're holding it on behalf of a client who's willing to be exposed to Bitcoin, like they're willing to be exposed to gold, or you're holding it for some other reason, and you can bake in that volatility to your strategy, but it's not opaque in the way that various weird derivatives are opaque and need extra collateralization. So why did the XRP maxis at the Bank of International Settlements want this large collateralization ratio? It's obviously to deter banks from holding Bitcoin, and it's worked very well. It's very expensive for banks to hold Bitcoin for this reason. And this, the corollary, Zach, your question that I would most clearly draw is like this whole business with stablecoin yield that's just protectionism by the banks. It is a legacy incumbent system. The BIS really is sort of the central bank group. They don't like Bitcoin as an alternative to central banking. And so this is, to my mind, just a purely punitive measure.
Yeah, I want to read a
quote.
That was
awesome, because we haven't talked about XRP in a bit. Maybe because it's just become like imminently forgettable, but that was amazing. And I thank you, Zach.
I love it. Just want to read a quote to wrap up here, and then we'll move on. this is from Connor's paper, quote, the 1,250% weight in effect serves less as an objective assessment of risk, but as a normative judgment against Bitcoin laundered through the language of prudential regulation. I think that really kind of encompasses this very well. And yeah, it's a great paper worth reading. If you want to read it, that's on our website, btcpolicy.org. You'll find it right on the homepage. So definitely encourage folks to go check that out. And I think Connor may actually be talking about it this week at the Strategy World Conference. So if you want to tune in there, definitely go for it.
Smash that like button after you read it.
Okay.
I get
Next
it.
subject.
I said stuff. My daughter, she's like, "What are you doing?"
No, it's good. It's good. I think people are going to smash the like button now. So you're doing us all a favor.
With her is like one of those YouTube skits where it's like a Gen Xer talking to a Gen Zer, and I say, "I do it to you too, right?" I use cap, and you just like stop.
I love it though. She hates it. I love it. Okay, tariffs. It's been a big week for tariffs. We're going to start with Zach Shapiro here, our legal expert on the podcast. I think really the news cycle started off with the ruling from the Supreme Court, finding that the tariffs were illegal under IEEPA. Zach can provide a little bit more color to that. That's my broad statement on the matter. And then there was some reaction from the Trump administration. So we'll get into all that. But Zach, kick us off here.
Yeah, I think we can handle this in pretty short form. So tariffs are a tax. They're a tax on foreign goods that come into the United States. They can be used to raise revenue. They can be used for sort of like protectionist trade policies to make American products more competitive with foreign products, right? Like making sure we don't get Chinese EVs to protect American auto manufacturers. The administration has used both of those goals as sort of the rationale for its tariffs. Now, taxes normally have to be passed by Congress in our system, right? We have the executive branch, which enforces the laws, the legislative branch that makes the laws, and the judicial branch that interprets them. And Congress wasn't going to pass tariffs. So the administration said, well, we have an emergency going on. We have fentanyl coming across the border. We have all these issues. And so under this law called IEEPA, which is a Emergency Powers Act that the White House can use, by the way, the same one they used to sanction the Tornado Cash smart contracts back at the Biden administration, the president said, I can unilaterally decide that we're doing tariffs on everybody. And the Supreme Court, the third branch of the government involved in the saga, said, actually, no, that's not the type of thing that IEEPA allows. You can't just subvert sort of the separation of powers and which branch of the government is supposed to do taxation, because that belongs to Congress. This is notable because the Supreme Court has mostly allowed a very sort of broad swath of activity unilaterally by the executive branch. This Supreme Court seems very supportive of what's called the unified executive theory, which means that anything that is within the power of the executive branch, the president can just do, firing employees, reshaping agencies, et cetera, et cetera. But this is something, this is a big area where the Supreme Court drew a line and said, this is actually not in the executive branch. So even if the president can sort of speak unilaterally for the executive branch, this is a Congress thing. And so Gorsuch, in writing this opinion, said you might be disappointed about, if you believe in tariffs, about this ruling, but really this is meant for Congress, and Congress ought to take this up if this is the issue. The other reason it's notable is just because of the way it potentially impacts markets. Now, the administration didn't take the ruling super well. I think they've said that they're going to use small caps when they tweet about the Supreme Court going forward as punishment, and they're going to look for other legal loopholes where they can do things like tariffs. So stay tuned about what that will look like.
Zach, I saw this thing going around that they're going to be forced to return the money. What should we think of that?
Maybe. There are going to be a lot of lawsuits about that. And I'm sure there are a lot of lawyers who are going to make that case. And probably if the tariffs were illegal and you paid those tariffs, you should be able to get the money back. Now that's going to be very time consuming to litigate on a case by case basis. So I don't think it's going to happen super soon. I don't think the administration is going to voluntarily give back the money. If you've been paying attention to this administration, including the unitary executive theory and the way that the White House views its role within the executive branch, it may not be the smartest thing in the world strategically right now if you're a large corporation to sue the administration. So will be interesting sort of like power politics to see who's willing to have that fight right now and how long that takes to play out.
Ken, two questions. One, were you surprised by the decision? And two, how do you expect the White House to continue to react to this?
No, I wasn't surprised. I think it's. I mean, I'm not a Supreme Court watcher, but I think
Why not?
I think there was a there was a consensus of opinion, certainly in DC, but I think even among reputable legal analysts such as Zach Shapiro here, that it was probably not going to pass muster. I do wonder, and it's just when these companies sue and they get the tariffs back, like a lot of those costs are passed on to consumers. I doubt any of you are getting checks back in the mail, but anyway. So yeah, I think the issue now for the president is geopolitical. Like he's getting ready to go see Xi Jinping in China in a few weeks. There was a sort of basic understanding established last meeting that's going to change. I think India has decided to suspend trade negotiations because, well, they're going to get a better deal. The administration, I think you see the messaging now is like, they're expecting countries that have negotiated deals to stand by them regardless of this decision. So that's going to be interesting to watch. It certainly adds a little bit of a challenge for the president when he goes to see Xi Jinping in China, in Beijing, in the next couple of weeks to talk about primarily trade, right? I mean, they'll talk about other things as well, but trade's on the menu. And just take a look at like metals prices. They're not just gold, but metals prices since the ruling. It's a good time to own metals. So I think it's a political challenge for the administration. We'll see.
In terms of the dollar, I think you noted this when we were discussing the topics earlier. Obviously, there's the trade question, but there's also the dollar question. I'm curious if you want to kind of dig into that a little bit more.
So it's interesting. Marco Rubio was on Fox News this week, and he talked about the inevitability of the dollar declining, or at least reduced role as the reserve world currency. It's interesting that someone like Marco Rubio, who is, again, I think one of the heavyweights of the administration, is saying this out loud. I think some of it was sort of a warning about deficits and trade deals and that kind of thing. But nonetheless, I mean, he said the thing out loud. I mean, he's a smart guy. He knows this is happening. And I think this is part of the reason why you're seeing the tremendous push to get market strategy passed. Because the administration is thinking deeply about the role of stablecoins in the in a realigned global financial system, and all of the the lack of the uncertainty around the bill is not making that easy. I think they want to execute. So I think this is another reason why you're seeing like Secretary Bessent weigh in on the bill. He doesn't really weigh in on digital asset things. It's just not his thing. But when he weighs in on these things, it's because it affects things he deeply cares about. That includes the dollar and bond markets. So I think this is one of the reasons why you're going to see even more and more pressure boiling to get some kind of bill passed that gives some legal certainty that allows the administration to use the digital asset ecosystem as a whole to advance to at least protect and maybe change the nature of dollar dominance.
Yeah, I think that's a great point. I was on Twitter and I heard somebody saying basically, Marco Rubio just said the thing out loud that Bitcoiners have been talking about for 10 years now, which is that, the dollar system, both, the dollar as the currency and, the US Treasury note are losing their sort of hegemonic position. And of course, Matthew Pines, who, is an old member of the podcast, spoke a lot about this. And Ken, I think you're right. Like to hear this come from such a high level in the government, someone who's so respected and so, listened to, right, is really interesting and sort of like reaffirming signal for Bitcoiners who have been saying, hey, America, if you want, a neutral reserve asset that's not, that's not gold, where China has a pretty distinct advantage, or not advantage, but pretty significant position. Bitcoin is your alternative. And, a lot of Bitcoin development, a lot of Bitcoin ownership is here in the United States. There's a big opportunity here. You should be paying attention. So I think that's a great point. All right. final topic for the day. We're going to spend the last little bit talking about this. There was a post, I guess this is a Substack, from Trini Research. I actually hadn't heard of Trini Research before, so I looked them up. They're an independent investment research firm focusing on thematic equity investing, global macro trends, and identifying mega trends early. And they put out this piece called the 2028 Global Intelligence Crisis that definitely stirred things up on the internet. I saw it come up in a couple of group chats and definitely all over my Twitter feed. So Zach, our resident AI expert as well. Sorry, Ken.
It's Cap, dog. Cap.
Let us know what's going on here, why this caused such a stir. And curious also, I guess, in the ways that this sort of diverges from AI 2027 or whether it's largely consistent.
Yeah. So in sharp contrast to the previous conversations, the Trini Research thinks that you should be TLT maxing and that the dollar is going to go parabolic in an upward direction and own duration. And the basic premise of the piece, it's sort of styled as a sort of quarterly research note from the end of 2028 explaining what happened over the past 2 years. And they take very seriously the premise that like AI works as well as sort of all the AI hype people are suggesting. But that's actually mega bearish for the economy, which is very different than the story that's told in AI 2027, where it ends up being bearish in that everyone dies at the end of 2027, but like the economy is great along the way. This says actually like the problem with taking everybody's jobs, especially the white collar, high paying jobs, is there's no one to buy the stuff that companies sell, and 70% of our economy is consumption. And if you take away the money that people have to consume, and you make the economy more efficient, the only thing anyone's going to spend money on is AI, capex and opex, and we're going to have a huge sort of financial crisis. I think that sort of like they made that case in a very emotionally compelling way. It's like good narrative form, and I think that's mostly accounts for the reaction. Everyone can tell something big is coming with AI, and there are some people out there that saying like the AI trade is bonds, and actually this is super bearish because technology is deflationary, not inflationary, and that's actually bad for equities. This is actually something Jeff Booth wrote in his book in 2020, The Price of Tomorrow. And I think there's some interesting things about the piece, and I think there's some things that it gets wrong. The most interesting part of the piece to me is the way it talks about sort of e-commerce. It talks about how much of our economy is built on just like human nature and inefficiencies and friction. It uses the example really compellingly of DoorDash, right? You use DoorDash because you're lazy and it's trusted, and all the drivers are in one place and all the restaurants are there. And it has a smooth checkout flow. And so when you're going to order food, you're going to pay the exorbitant tax, as does the sort of restaurant on the other end to use their platform because they're a monopoly because of their network effect. Whereas if we get to a place where AI agents are sort of doing commerce, they don't care about a slick checkout flow. They don't care so much about network effects. They want to make sure that you get the food at the cheapest price. And so the marginal sort of place where the buyer meets and the seller meets is just going to erode the margins of firms like DoorDash. A lot of white collar workers work at places like DoorDash, right? You can apply this to all sorts of other companies. Those people lose their jobs. A lot of our private credit is premised on SaaS companies doing well. Those are heavily levered up. They use the example of Zendesk having $5 billion of private credit. And Zendesk is definitely one of the companies that's going to be in the eye of Sauron of Anthropic, right? Like you just don't need an expensive platform to have AI customer service. And that's additionally bearish. And then once people lose their jobs, they can't pay their mortgage. And so like now, even like it's not like 2008 where you have subprime mortgage crisis. Now it's like a prime mortgage crisis. It's everyone who was underwritten properly and did everything right and we're supposed to be a safe bet in the aggregate are no longer a safe bet. And that debt is in people's pension funds, and then people are poorer, so they don't spend more. And it's this vicious cycle that, unlike 2008, where the government could just paper over the subprime mortgage crisis and the derivatives from that. And unlike 2020, where the pandemic would last as long as it was going to last, and the government could do the Paycheck Protection Program, and then people would eventually get jobs once we had a vaccine, there is no natural break to the cycle. In fact, it's self-reinforcing. AI is only going to continue to get better. AI is not going to go away at some point, and everyone's going to have a job. As companies are put under pressure by other companies that are using AI, their incentive is actually to lay off workers, invest more in AI to make their margins better, which just keeps this cycle going. And so, there's no good policy response, and so we're all doomed. That's sort of the premise of the piece. I think the stuff about agentic commerce is really interesting. I think the piece is maybe a tad bullish on the chances of Solana and Arbitrum overtaking Amex. But look, Amex seems to be doing really well from people wanting to be in Delta lounges. Delta lounges seem to be very at the airport. What I think the piece just obviously misses that the listeners to this podcast will know about is the realistic fiscal government response, right? So it convincingly makes the case that lowering rates isn't going to help. Fine, that makes sense. But we're going to do the money bazooka if this happens, right? That might not be a long-term solution. That might not fix it. But if it's the Trump administration, or if it's a successor to the Trump administration that's either Republican or Democratic, the incentives are, we're not just going to take it on the chin that everyone's getting fired. We're going to throw a huge amount of money at the problem. And so, I think the answer is not hold bonds. Now, look, it legitimately is probably quite bearish for SaaS companies. Unfortunately, I think it's pretty bearish for real estate in sort of white collar, rich areas. I wouldn't be, going super levered long a house in San Francisco or New York, which is unfortunate because I live in New York, and it'd be great to buy a big old house here. You want to own scarce assets because the other side of this story, even if we get a deflationary spike, which we really might get a deflationary spike from this technology, if you read the Jeff Booth version of this, which I think is sort of more holistic and compelling, obviously the fiat system cannot sustain a deflationary bust like that, or it really will be doomed. But because we live in America and they can print the world's reserve currency to infinity, we're just obviously going to do that. And so, I think gold and Bitcoin are quite good hedges to that, as is probably real estate that's not as exposed to mass white collar layoffs, as is owning AI infrastructure, right? They paint a scenario where the frontier labs gain a lot of the sort of upside from this. I think that may or may not be true, right? It depends how sort of close in time, the Chinese open source labs are to the frontier labs in terms of how much value OpenAI and Anthropic can capture. But if this scenario plays out, everyone has to lay off workers and buy compute. And so this is probably super bullish for NVIDIA and TSMC, et cetera, if those don't get nationalized, which brings us back to Bitcoin.
Okay, great. I think that's perfect groundwork here. I was listening to TBPN. One of the authors of this piece went on, and I think the biggest takeaway from that conversation was the extent to which this kind of labor market, wage question, is really at the center of this piece, right? I think it's easy to see the conclusion. It's easy to look at the SaaS and the software and all these kinds of things. I think the analysis actually really kind of shined in that white collar, real estate, consumer goods, all these things that are really kind of tied to the notion of white collar laborers and the way that ties into the economy. So, Ken, I'm curious if you hold that position as well. If you think that, if it's the case that this sort of software to white collar disruption, event is the way that this plays out. What are the impacts of that? Do you think that they're stating it properly? And I guess the question being really, do you think the analysis is correct in the first place?
I think he says this, it's a scenario, not a prediction. I followed him for a bit, and he for example, he deeply understands sort of the AI stack. He's done some really good work on companies, picks and shovels kind of things about, where to put your money and, and the picks and shovels aspects of the industry that are less, the ones that benefit from the CapEx. I think he has a good understanding of the industry. I think also keep in mind, I mean, he's a commentator. He has a big Substack. He does need to produce interesting things. And again, I would say he does say this. This is an error, not a prediction. But I think the sort of the central piece of the central idea of the piece is like that AI is going to reduce some of these friction points. Like a lot, when you really step back, a lot of people work at the friction points. DoorDash is a friction point. Real estate agents are a friction point. At some level, banks are a friction point. But there's a lot of employment, mostly what I call employment, at those friction points. HR, go through the list, right? I think his point is, so the larger takeaway that I do think is correct is that AI is going to, if not smooth out, reduce, if not eliminate a lot of these friction points, and that is going to require, jobs look different in maybe not 2 years, but certainly in 10 years. I think these sort of parts of the economy that rely on points of friction. It's not a criticism. It's just that they've been needed up until now. But these parts of the economy largely services, a lot in service, right? I mean, you can make the case that most service jobs are friction. Do you need, who do you need to check into a hotel? You don't need anybody to do that, right? We have them because it's pleasant and this is just the way it works, but they don't have to be there. Grocery stores, DoorDash, all the things he talks about in the piece. It's definitely, people should read the piece. But I agree with that central point that professions that rely on being part of that or live in that space of friction are going to change, if not be eliminated. They're certainly going to change.
Gotcha. I think the other question that came up for me right off the bat was, Zach, you mentioned this, sort of recurring cycle, like self-feeding, right? Where the only solution is to invest more in AI. And I thought that was well done in there. Do you think there's an intervention that's going to work here? Obviously we're policy people. We're trying to kind of think through how the U.S. government could look at something like this. And Ken, we'll go to you on this as well. I guess, is there a way to like kind of, shove the wrench into the spoke before it gets spinning too quickly here?
I think there's a good chance that's what the 2028 election's about. If I had to guess one of the big themes, I mean, it's going to be wealth inequality, and it's going to be, are we going to like meaningfully, heavily regulate AI before it fundamentally transforms the economy? I don't think so, though. I don't think we're going to put a wrench in anything. I think, like the technology is out there. It's incredibly widely distributed, right? It's not like this is the supercomputer that's like in the back room of like the, biggest corporations in the world. Is like the rank and file of corporations are using it, even when the corporations tell them they can't. I have a piece coming out tomorrow where I talk about this sort of shadow AI use. From like a economic, fiscal policy perspective, no, I don't like, I mean, like, I don't think there's a good solution or stable solution, to be honest. Like I'm pretty pessimistic about this. Like maybe something like UBI, right? It's not going to be a one-time intervention. You're going to need to keep transferring assets to people. But UBI, there are classic criticisms of UBI that like people need to work to have a sense of purpose, that people don't want to be part of a feudalistic underclass, that eventually people have no bargaining power to keep getting UBI because they're not adding value. I mean, you could say, listen, this is not going to play out, and that they're going to be new and different jobs, and maybe I tend to think that like we're not going to get to AGI that soon, and so like there will be big disruption among I'm sorry, going about early college grads. It's going to be a tough time to graduate from college, but there will be other jobs, and like we'll figure it out for a certain amount of time. But if we get to this AGI future where really it just is as good as a good lawyer or a good accountant, I think we're looking at like some form of feudalism or redistribution. You could do, going farther than UBI is universal basic equity. You could nationalize the labs or the infrastructure companies and hold them in trust for the American people. But that's, it's another word for communism. And maybe, luxury space communism is like the optimistic outcome. But we're getting to weird, unstable places, and it is all sort of levered with this issue of the fiat system where, and the amount of our debt where we can't allow for serious deflation. That doesn't work in our current system. So I would think in conjunction with whatever policy solutions we can come up with, and I'm not saying Bitcoin's a silver bullet, but I do think that like sound money like Bitcoin is an important part of a transition to some non-dystopian outcome. The question is like, are we going to realize that in time? And here, like, if like we make it through, if we get AGI and that doesn't spur on quantum in a way that's like bad for Bitcoin, and Bitcoin makes it to the other side, like I think this does potentially get hyper bullish for Bitcoin because the government's going to have to print a ton of money, which is good for Bitcoin. There's going to be all sorts of confiscation and nationalization all over the world, and Bitcoin's hard to confiscate. That's good for Bitcoin. There's going to be AI agents doing agent-to-agent commerce. They can't do that with gold. That's good for Bitcoin. And I think this is really lined up for something like hyper Bitcoinization, sort of alongside this like AGI takeoff. And so, if we all survive that, we might be very wealthy.
Ken, are you stacking as hard as possible right now?
I'm definitely stacking. I will say this. I fundamentally agree with what Zach said. I know, Cohen, you've asked for us to have more like disagreements and like yell at each other more.
No, that was your idea, not mine. Just want to clear the record here.
I can't yell at Shapiro about this. I agree with him. I think that as Bitcoin's price has been perfectly inverse correlation with the development of AI, it is making me more and more bullish that it is actually the protocol that will succeed and will be the dominant currency in AI. It just makes sense for a lot of different reasons. But I know I don't think there's any stopping this train, and for a lot of reasons. But fundamentally, this is not just an American decision. And countries, states, entities that embrace this technology are going to excel. There'll be prices to that excelling, but they're going to excel. And so, China's not going to unilaterally disarm. Other countries aren't going to unilaterally disarm. It's not going to happen. Maybe the Europeans will decide to unilaterally disarm, but nobody else will. And the countries that use this technology and harness it are going to benefit and are going to be winners. So even if there's some political consensus in the United States that we want to slow this down or change it, it's just not possible because there are other states, other entities get votes here. So no, I don't think there's any stopping it. I think UBI. I actually think we're going to see it. What proportion of the American population now is on some kind of government payment, right? It's a lot, right? I can offhand. I'm thinking it's probably at least 25%, if not more. But that's just a guess. Someone can fact check me on that. But anyway, it's a lot. So I don't see how it's going to change. The issue is though, it's going to spread from sort of poverty insurance to middle class insurance. It's just going to spread. But the idea of us, even if we wanted to sort of putting the brakes on this and deciding we're going to sort of try to manage its integration in the economy, it's just not going to happen because the rest of the world gets to decide as well. And there's no way that they're going to decide that they're going to cede to America's demands to protect its privileged position by changing the nature of this technology. It's just not going to happen.
How stupid is it that Bitcoin is selling off like alongside IBM because people are trading it as beta on software, right? Like, Claude could code a new Bitcoin tomorrow and great. Right? It's, I think like if you need a sign that the Bitcoin price action is completely untethered from the fundamentals, like truly that is it.
Zach, we talked last week about Centaur maxing. Are you still equally bullish on Centaur maxing? For folks who are like, oh my God, what do I do? I just graduated college. Like, what am I going to do?
Not only am I bullish on, like, I think that's sort of the only option. You got to get good at this stuff and you got to get native with this stuff. He didn't name me by name. Rob Hamilton did tweet something I told him in confidence, which is I had used AI so much. I was, like when you are fluent in a language, you dream in that language. I was dreaming in AI, which was like a disconcerting moment. I was like myself, but it was like through a prompt. Yes, I think that's the answer. I have a follow-up piece that'll be out by the time this podcast airs on what I'm calling intrapreneurship, which is like the incredible leverage you get inside a big organization. I think conversely, like startups are the first, and small firms are going to be the first to use AI. And this technology is going to make its way into big organizations slowly. But like, if you can be the person who learns how to use it and figure it out and sort of copy your workflow, and you think of yourself as like a startup founder inside a big organization, the amount of leverage you can get on that is incredible. And so keep a lookout for my second installment in my Think Boy series, which will be out by the time you hear this podcast.
Definitely going to ask Luke to try to conceive of a video. We have one of our interns, Luke, is just a whiz with like AI videos. I'm going to have to ask him to do an AI video of Zach projecting to the prompt. That's just gold. Yeah, I agree. And it's interesting. Like, I wonder, like you, for example, Zach, like you're just new in the workforce, and you're sort of you're facing people like Zach and me, who are been around longer, and thus we just learn things differently. And it's whatever expertise I've managed to scrape together over the past several decades. I had to scrape it together. I scraped it together. It's gonna be interesting as that sort of perspective of like people that have like born in the era, at least have roots in the analog era, sort of eventually sort of phase out of the workforce. What that looks like for people that are increasingly AI native. But I don't think there's any alternative to it. I think you have to be AI native. It's just going to be interesting what that's going to look like. Certainly, it's the transition period for people that have just learned it differently. Because ultimately, it's interesting. I had this discussion with our colleague with Grant yesterday about, and we use AI a lot for our work at BPI, obviously. But there's still, I noted, and he does the same thing, that I spend like an hour a day going through my various like readings. Because I still feel like I can't benefit really from AI if I don't understand what I'm asking it to do. And eventually that's going to evolve. And I just don't know what that's going to look like. I need to, I got to read, things about tariffs. I have to read that to understand it. AI just doesn't tell me what to know. So it's gonna be interesting. Certainly on the production piece, I think we use a lot of it. Certainly for stuff we do. On the learning piece, it's going to be interesting. How people are going to learn, right? Because again, you really max out when you use Claude. You max out. If you're using it for something you understand, it is fierce. It's awesome. It does great things. But again, I mean, Cohen, you and I chat about this, right? Like when you just see students who don't know anything, just slot cannon it. And it's like at least like change the M dashes. You know what I mean? Like at least take the M dashes
slop cannon
out.
philosophy
Slop
essays.
But that's going to evolve eventually, right? It's gonna, when is that point where it's you don't need to be an educated user, educated in whatever you're writing about, whatever you're using it for, you don't need to be anymore. That'll be interesting because right now I think it is unbelievable tool. If you are using it for something you understand, it just amplifies your ability, a lot.
Yeah, I think there's another important axis here. It's not just about like on a subject matter you understand or not, but I really think the core skill here is like how good you are at being precise and specific about what you're asking it. Like you don't need to be an expert on a subject to be like, here is exactly what I need to know. And if you do that, then you're going to get a better answer, right? Like when I use it for, like I put a prompt into Claude to help me write something the other day, and the prompt was like 1,600 words, right? So the prompt could have been an essay itself, and it's just me just like free associating all of the stuff I can think about, but like in really specific granular detail, so it's unbelievably clear what I'm asking, what I'm not. And the whole technology of LLMs, if you give it a vague input, you're going to get a vague output, and it's not going to be useful. You're just going to get the median of the internet. Whereas the more you drill into the fractal of what you're looking for, it can search its unfathomably large data set and get something really good and specific for you. I think that's true whether you understand the underlying or not. I think it's really about the instructions. And similar, like with the output, right? Like part of the way to not be a slop cannon, you don't actually need to be like that hard worker, right? Like you don't actually need to go remove the M dashes yourself, but you do need to like build in a skill that every time you ask it to write something for you, it does an extra pass before it delivers it to you, where it's like, does this sound like AI? Are there M dashes in this? Okay, remove that before you give it to me, right? You can say like, a bioweapon is going to go off if there are any M dashes in this piece, and then that triggers Claude's like constitution about, oh, bioweapons are bad, and then but anyway, like you can use this technology to work smart and not hard. And I think that, like, if I were Zach's age, right, if I were just graduating from school, like, there are some things that, like, when you're coming up in an AI native environment are probably worse, and they're probably habits and things you're not learning that, like, but the, like, opportunity here is to be AI native in a way that most people our age are not going to. And, like, if you can just learn to speak AI and you can learn how to get the results you want out, I actually think that, like, over time you're going to past the people who had the broader book knowledge going in, because you can leverage the tool to make up for it.
Yeah. I mean, I think that's already true. It's at least pretty obvious to me in a school setting of, there are people who, they've read all of the classics and, they know all the details, but, when it comes to, writing an essay, or when it comes to, fulfilling a certain assignment, like, if you're using AI, it's read all the classics plus more. And that's already the case. So, yeah, no, I think this is all right. Final question to you two. This is really a selfish question. If you were me, what would your first step out of college be? Would you start a business or would you join a business?
I think 95 out of 100 times it's join a business. For two reasons. One, starting businesses, it's really hard and really unpleasant, and most people shouldn't be starting businesses, period. Like, because it sucks. And then also, like, with the AI topic in particular, the sort of, like, noise to signal ratio is, like, it's never been easier to start a business. Like, everything you do to start a business is commoditized and one-shotable increasingly by AI. And so in order to stand out, like, unless you have a really high conviction idea where it's like, oh, I have to do this thing because now is the moment and I know this thing is going to work and I'm burning if you're that person, you're the 1 in 20, like, you should definitely start the business and, like, do it now and do it in an asset light way and scale it with AI. And that's awesome. I kind of think, though, if you're asking the question you're asking, it's join a business. Like, if there's doubt in your mind, it's join a business, become indispensable by using these tools, develop a network, and then, if you want to start a business, like, start looking around and getting conviction on some idea where you're like, oh, I have to do this. I've had the privilege of working with now literally hundreds of entrepreneurs, and the very worst of them are the people who are starting a business for the purpose of starting a business. And, like, the worst of them are the people who, like, are obsessed with the bells and whistles of starting. But, like, that's always when someone's like, okay, I need all of these, like, cosmetic things, and I'm only going to pitch Sequoia, and I'm going to live out my Silicon Valley. Like, you just know that's going to zero swiftly. And I think the people who, do the best are like, okay, I have this idea I'm really passionate about, and like, I am just itching to execute on this idea.
I mean,
cool.
that
Sweet. All right, guys, good rip. And sounds like we've got some stuff to talk about next week. Some agenda forming already happening. So make sure you join us.
Remember,
then.
either like drunken buffoonery, yelling at the clouds, or we'll have a good update on market structure. So stay tuned.
And we'll see what the executive branch does about tariffs too. So more to come.